We're half an hour away from the open in Hong Kong. You're watching The China Show, and I'm Annabelle Drewlers with David Ingles.
Good Monday morning to all of you. Our top stories today, stocks across the Japanese markets surging while the yen is under pressure after Sanae Takaichi is elected the leader of the ruling Liberal Democratic Party.
She is a supporter, of course, of easy fiscal and monetary policy, now poised to become Japan's first female prime minister as the LDP bets on a swing to the right to win back voters.
Also ahead, a Bloomberg exclusive. Beijing is pushing the Trump administration to lift national security curbs on Chinese deals, dangling the prospect of a massive investment package.
Plus, a closer look at China's chip-making ecosystem as the AI frenzy continues to fuel a rally in tech stocks.
Good Monday morning. Thank you for joining us today. It somewhat matters a lot less that you don't have trading today in Taiwan, Korea, and mainland China because Japanese stocks are front and center. And as you can see why on your screens, a pop of 4% on the Nikkei 225, which should put us on track for the best day since April. We'll unpack the market implications, the implications on rate policy, the implications on the economy and geopolitics in a moment there out of our team in Tokyo. But as you can see, it's a strong equity market story. It's not really the best as far as the Japanese, perhaps, yields are concerned. We can talk about in a moment there. Dollar yen, 150. Who would have thought? In fact, when you look at euro yen, that's already at a record high as far as that specific cross is concerned. 40-year yields up 14 basis points today. This rethinking around what this means, or the timing at least, flip the page please, around BOJ rate hikes is playing out across the banks. As you can see, that repricing there, given, of course, what we found out over the weekend. Elsewhere, though, we're looking at likely some pressure coming through as well. When you look at Chinese markets, the contract in Singapore is coming online. S&P futures are better. Singapore is also coming online. F1 weekend. Congratulations, of course, to those who enjoyed it. We had a T1, though, here in Hong Kong. So, no, T3, actually, better than you. Yeah, there we go. Sorry, I'm shortchanging us here in Hong Kong. Euro on your screens. There have been also some developments as far as French politics is concerned. The finance minister, for one, a gap lower in the euro, a gap higher in dollar yen really puts us dollar on stronger footing today. Gold coming up on your screens, 4,000, very much in play. That's coming on your screens. And, of course, Brent, as you can see, also out of OPEC Plus, and Bitcoin. Stellar weekend, was above 125. It's a little bit below that, as you can see. So that goes into tech, that goes into crypto-related sectors we're tracking today as we go into this Hong Kong Open this Monday.
Yeah, and really there's going to be the key sectors for us to be watching as well. You've got crypto, you've got oil-linked stocks, you've got tech is still a big story for us as well because we had a bit of a teardown into Huawei's Ascend chip. That's the AI chip series over on Friday, and it did show there's still some components in there from TSMC, Samsung, SK Hynix as well. So that's sort of a key sector to be tracking. Hong Kong stock rally, I mean, that's yes, beyond Japan today, still tracking that because we're coming off the best week since March of, I believe, yes. And mainland trading, as you said, it still is shut as we continue to track any data that we get from Golden Week, that holiday period. SEMP was reporting that it's been a really strong start, and actually Alibaba as well had some data out for AMAP, which is their travel platform tool, and that showed 360 million daily active users on October 1. That's the highest they've ever seen for that tool as well. So it is just sort of some of the incremental data we're starting to get.
Yeah, that's interesting because you only tend to use the map when you're not familiar with a place, which I guess is indicative of tourist flow.
Yes.
Into certain places. We'll talk about that in a moment. But yes, I mean, the fact that mainland markets are shut, so you don't have a lot of volumes coming through the Stock Connect today. To our top story, Japan. And we showed you why just there. Pro-stimulus conservative Sanae Takaichi is now poised to become Japan's first female prime minister after winning the leadership of the ruling LDP. Let's bring in our team out of Tokyo, Sherry On, our co-anchor for Asia Trade, in the studio, and also with her is our Japan equities reporter, Alice French. Sherry, let's start with you. Quite a big one as markets are repricing their expectations there. Tell us what the major implication of this would be.
Yeah, we're talking about Sanae Takaichi, right? I mean, you said it, she's pro-stimulus. We know that she's a nationalist as well. She's also a fan of Margaret Thatcher and a known heavy metal music lover and also a drummer. She is expected to become, as you said, the first female prime minister of Japan when we have a parliamentary vote later this month, really showing that the Liberal Democratic Party is betting on this swing back to the right to attract young voters. She had really widespread grassroots support, which potentially convinced LDP lawmakers that she can really bring the party together. But it's all about Abenomics, right, and what this means for the markets. She has been a fan of easy money policy, hawkish when it comes to diplomacy. She has criticized the Bank of Japan lifting rates. In the previous campaign last year, she in fact called lifting rates being stupid, although she did dial back her tone on the BOJ during this campaign. But she has talked about the potential of needing extra bond issuance, which is why you can already see the market implications when it comes to how JGBs are reacting today. She's talked about raising the tax-free income allowance, really promising those cash handouts and tax rebates to help Japanese households. And when it comes to really making the new cabinet, of course, will be key. And what sort of compromise she needs to make with other opposition parties, given that the ruling LDP has, of course, lost the majorities in both chambers of the legislature here in Japan. That's why potentially some analysts are saying that these moves that we're seeing on the markets today could be short-lived.
Sherry, what about the line as well that Takaichi needs to walk not just with China but also with the US? And you could say perhaps when it comes to negotiations or discussions with both of those different countries and governments, Japan doesn't necessarily hold all the cards, but you do have that national question as well. So let's just hear what Takaichi said about her relationships and what we can expect as well with the Trump administration.
If we face something against national interests, I believe it's important to clearly express our position within the framework of the Japan and US agreement. At this point, I have no intention of overturning any agreement made so far.
So how is Takaichi going to be able to not look weak in the eyes of voters, but at the same time, it's going to be difficult to deal with Trump's demands?
Yeah, especially in a month that President Trump is now, according to reports, expected to come to Japan and potentially hold a meeting with Sanae Takaichi, right? And she's mentioned during her campaign that she would be open to renegotiating the free trade agreement, although she's also walked back those comments. But we know that there could be tensions around the $550 billion investment fund into the U.S. We have seen, of course, Takaichi also talk about defense spending. She's a hardline conservative. That could actually prove appealing to President Trump, who wants Asian countries to increase defense spending. But it's a heavy agenda for Takaichi because we do have the East Asia Summit in Malaysia. We have the APEC Summit in South Korea later in the month as well. And we know that she has a reputation as a China hawk, which will alarm Beijing. She has called to deepen ties with Taipei as well, which will not really play well with China. She has talked about the Yasukuni Shrine. She said that she'll make appropriate decisions over praying at the controversial shrine that also honors war criminals, that is seen as controversial not only in China but also in South Korea. So we are watching those bilateral ties here across Asia as well. Sanae Takaichi is now expected to become the first female prime minister of Japan when the parliamentary vote happens later this month.
Alice, can I bring you in? Sherry mentioned one sector, defense. I'm looking at my board here, looking at machinery, look at real estate, construction. How do we now look at sector winners benefiting from this win, Alice?
Morning. Yeah, I mean, as you say, we're already seeing defence one of the biggest winners today. Some defence names up over 15% this morning, seeing some of their biggest gains since April, that kind of post-tariff rebound that we saw. As Sherry mentioned, of course, Takaichi has spoken a lot about the fact that she wants to boost defence spending. She also talks about this kind of strategic investment, right? So she wants Japan to sort of regain its glory in various key industries, which, of course, includes things like chips, tech, AI. And so we're also seeing tech stocks stocks pretty strong this morning. Construction and infrastructure, as you mentioned as well, are set to benefit from more government spending. Real estate too, which could be a beneficiary if Takaichi does put some pressure on the BOJ to kind of scale back those rate hikes. On the other side, of course, we're seeing banks weaker today. There are some expectations that, perhaps a rate hike is going to look less likely this month now that we have Takaichi, who is slightly more dovish when it comes to monetary policy, sort of at the helm of the LDP. So it'll be interesting to see how much of a sort of knee-jerk higher it is today for those beneficial industries and whether the momentum can continue under her leadership.
Yeah, so just talk us then about the trajectory. I mean, where do you see it then going over the next week or two as we try and decipher what the policies are likely to be and how much of this is going to be possibly a shift back to Abenomics?
I mean, it's difficult to predict at this stage. I think at the moment, particularly from the market perspective, people will be looking in her rhetoric for any signs that she's trying to sort of upset the status quo, OK? If she sort of makes any comments related to monetary policy, anything related to the BOJ, particularly as we're just a few weeks away from that rate hike decision, that will obviously, markets will be very sensitive to that. I will say, though, we know that the LDP is in a minority of both houses, and I think it will be quite difficult for her to completely shake things up. Most investors seem to be expecting that she will be slightly more moderate going forward than she was in her last leadership campaign. And, if that turns out to be the case, then the downside for banks may be sort of short-lived. But as Sherry mentioned, of course, we have Trump in town in just a few weeks' time. And so there will be sort of some nerves, I think, around those kind of US-Japan relations and seeing sort of which direction Takaichi decides to take them in. But if she is able to sort of, have a good rapport with Trump and potentially strengthen those relationships, and that could be good for things like shipbuilding, for things like tech, for things like defence. So I think it seems like there's more sort of positive expectation than worries, at least at this stage, but, only time will tell.
Yeah, it'll be interesting to see as well whether foreign investors, we know that they're big buyers, are they going to continue to have that appetite? But that was our Asia Trade co-anchor Sherry An and also our Japan equities reporter Alice French in Tokyo for us. And we are going to continue the discussion on what's in store for Japan under Takaichi with Syracuse University. That conversation is coming up in the next hour.
Yeah, but ahead of that, Maybank Asset Management. So the rates market seems to be also giving out its initial prognosis of what took place in Japan over the weekend. We'll talk about that. The lack of data as far as the Fed conversation goes, and really fixed income with Rachana Mehta joining us in a couple of minutes out of Maybank, counting down to the open of trade here in Hong Kong. And we're coming off a bit of weather, not too bad though. Futures are pointing to the downside, 17 minutes to the opening bell.
You're watching the China show this morning, but really all the action is happening in Tokyo because we've had markets coming online after the surprise election of Takaichi to the leadership of the LDP. So you're seeing really a very strong reaction here across the board. I mean, stocks are surging and it's kind of playing out as you might have expected in bond yields, but also the Japanese yen. They're very close to that 150 mark.
Yeah, 150 and that. Euro yen's already at a record high. Just a few days ago, markets were pricing in a nearly 70% probability that the BOJ would hike on the 30th this month. That's gone down to 20% as we speak. So certainly that's being pushed back. What does it mean for broader rates markets? We're joined out of Singapore, Rachana Mehta, co-head of regional fixed income at Maybank Asset Management. Good morning. Thank you for joining us. Just where does your head go looking at the elections on the weekend and this repricing we're now suddenly seeing in the FX and rates markets, Rachana?
Yeah, absolutely. So actually, I think the expectation of Takaichi win was maybe about 40-50%. But everybody knew that if she comes, yen will weaken and the rates will go higher. But I think over the recent conversations, we have noticed that short term, yes, she wants to boost fiscal because she believes that it will improve the GDP growth. But long term, I think still she worries about debt to GDP ratio. So I feel, yeah, short term, you see a weaker yen, maybe higher rates in Japan. I think the spillover to the other countries, especially Asian countries in terms of rates, will be limited. Yes, in terms of currencies, I expect more spillover because at some point, actually, I was expecting anyway the dollar to strengthen this month. So this is one of the push where the dollar will strengthen. But long term, still expect the dollar to weaken, especially across Asian currencies and Euro, Aussie, renminbi, because China is still out for holiday. So we'll have to wait and watch what kind of fixing China will do when they come out. In terms of rates markets, actually, U.S. Treasury, we have seen some sell-off. So I do expect, especially the long in the 30-year in the U.S. to sell off maybe 10, 15 basis points. But around 4.9, I think I would like to go long duration because this is what we were hoping for, that there may be a correction in the 10 and 30-year U.S. Treasuries. But come to Asian rates, I don't expect too much because they are very domestically oriented. So I don't think so that the JGB market will impact a lot of Asian market in terms of rate, but in terms of currencies, definitely.
Yeah, so how long then, if you're saying you expect the USD to move over the next few days, you're seeing the Japanese yen weakness then sort of being a short-term move?
Yes, so I do believe, okay, for yen, because remember, Trump's administration also wants actually a weaker dollar. So given that we are talking about even they're trying to work out a currency deal with Korea, so we'll have to wait and watch and see what kind, because I'm sure they're not going to like such weak yen or weak Korean won. So I think the implications are there also when actually the APEC summit comes by maybe end of October. So I do believe that, yes, short term, I do see a spike and even in Asian currencies, but medium term, still expect the dollar to weaken.
Rachana, speaking of, I'd like to borrow something you just said right now, working out. Markets are trying to work out which of the two Fed mandates are more actionable because we obviously have a sort of a gap in terms of vacuum in terms of the economic data given the shutdown. Do you think the assumption still would be the labor market will force the Fed to cut interest rates, or is that also up for question at this point, do you think?
No, I think they will definitely, because there's not going to be data, at least CPI data also may not be out. So I think definitely 25 basis points is expected. They will, because they will look at the ADP report because they may not have the data before that. So given that ADP report was weak, I do expect them to cut 25 basis points in October. And then going forward, I still expect one more cut, but we'll have to wait and see for the data. And especially how long the shutdown lasts is a very, very important factor. The longer it lasts, I think there'll be more impact in terms of the U.S. economy, in terms of the growth slowdown.
Yeah, so then if there's higher funding needs going into next year as well, what does that tell you about the direction of treasuries and any possible worries about a sell-off next year?
Yes, absolutely. Because I think this year, given the slowdown and what is happening in terms of administration policy, I expect actually the 10-year treasury maybe to drop below 4%. But next year is interesting because I think that the deficit is going to be higher, and the tariff revenues, we are still not sure because the Supreme Court has to give it a decision by end of the year, and the tariffs are clawed back, and then the shortfall is going to be big enough next year. So to me, I think I'm just a little worried about next year in terms of U.S. Treasury and the rate cuts also and inflation coming back. So I feel next year you may see Treasury going back again above 4%, maybe to 4.5 for 10 years. As of now, still believe for this year, it's okay, it's a good play, but for next year, we have to watch and see, but I expect the next year the Treasury should be in a higher range, maybe 4 to 4.6, rather than below 4%, at least for first half.
Can I ask you too about, I know you primarily look at fixed income. I'm just going to mention what's been happening in the equity market because I want to get a sense of what the appetite is for fixed income given this global equity bull market, and I wonder whether that's affected inflows into fixed income strategies like income, for example. How is that, I guess, in many ways showing up in your world, Rachana?
Absolutely, you're totally right, David. We have not seen much inflows in the fixed income market, honestly, because everybody wants like higher dividend yield, higher everything. I've seen this over the last 2-3 years. It's like everybody wants to just make 10%, 15%. So we have not seen much inflows, though Asian credits have done very, very well. Actually, most of the inflows are going into equity markets or balanced fund rather than fixed income. So the only way we are getting flows in the fixed income is through balanced fund where there are equity and fixed income and gold. So definitely you are absolutely right. And I was always hoping that this year will be a fixed income year, and it looks like again it's an equity year. So hopefully we'll have to wait and watch unless there's a big slowdown coming next year, then we'll have to see. But absolutely right that we've not seen much flows. The only way the flows are coming is through a lot of balanced funds.
Are you hoping for a bear market in equities? I'm kidding. Rachana, so a question for you then. People are searching for, to your point, right? We're looking at, so what is available right now in your space in terms of income? If I'm looking at income, fixed income, not too much as far as risk, up the risk spectrum is concerned. What's the all-in yield at the moment? So
all-in yield, actually, technically, you can, depending on where you're investing, because you can buy some local currency, you can get currency alpha. So all-in yield is roughly about 5.5 to 6%. So it's still not bad in US dollar terms, correct? So you still get 5.5 to 6% roughly all-in yields. And if you expect some capital gains, especially if you look at the GCC market, you're getting slightly higher premium when you are buying, say, investment-grade bonds. And even in, like, I think if the equity markets are strong enough, maybe you can buy a mixture of high yield and IG portfolio, so your yield you can get around at least 6.5%. So I think it's still not bad, but I think people are looking for 10, 11%.
Rachana, thanks so much for joining us this morning. That was Rachana Mehta there, co-head regional fixed income at Maybank Asset Management. And just taking a quick look at Hong Kong pre-market, we're off around 0.5% this morning. But remember, of course, coming off the best week since March of this year, we did actually see the Golden Dragon Index as well off 1.5% on Friday. So sort of a bit of a direction that we took from Wall Street, perhaps. We'll have plenty more ahead. This is Bloomberg.
Yeah, it's Monday. And it's a holiday tomorrow as well, so we're sandwiched between what normally, well, nothing's happening. Japan story, of course, was the weekend big thing, crypto. But then we have a holiday, as I mentioned, tomorrow. So that's just me, my way of saying there's nothing happening, and that shouldn't be surprising at this point.
I feel like you could have just said blah.
Well, I could have. The thing is, we had time to burn through.
Time to kill.
Yeah.
All right. We can take a look at maybe what is moving in the session because chip stocks, of course, want to watch this morning, and also some of the analyst actions. But CATL, this will be a good one to track because it's just been cut to neutral at JP Morgan. So the price target there, 600. Of course, you're still below that point. Battery space still at Tianqi. Lithium, 8 shares also cut to hold. Zijin Gold just after its big IPO, of course, or listing, but has been rated a strong buy at China Merchants. You can see they're up 2% so far in Hong Kong. But let's also take a look at some of those movers in the session, possibly what we'll be tracking. Goldman Sachs has hiked their price target, so no more analyst actions, but for SMIC, Huawei as well. Those two are sort of diverging here. We did have another story about Huawei using TSMC, Samsung and SK Hynix components in their top AI chips. David mentioned some of those sectors we're tracking. So, of course, it's crypto, it's gold, it's these sort of havens, I guess you can say, or what's acting like a haven. And oil, of course, because we had OPEC Plus agreeing to a more modest production hike than was perhaps expected. But again, not really seeing a key theme developing so far out of those movers or possible movers. Final check on Japan assets, because that's really where the story is today. Seeing huge moves in the Nikkei, the topics, bank stocks expectedly under pressure.
Public service reminder. I need more coffee. Did you sleep well? I didn't sleep well.
I did not sleep well.
No, I think it's the weather. I think it's everything. But yeah, who do you blame?
Myself.
What are we blaming? Okay.
I don't have anywhere to go except myself.
But Monday's always difficult.
It is always tough, especially when you're coming off the weekend. Your body clock's just gone into a different mode, then suddenly Monday morning, it's just the alarms going off. But anyway, okay, we've made it to the Hong Kong Open today.
Yes, here we are.
and at the start of the day, look, we can see we're under pressure so far. It sort of tracks what we had on Friday. The Golden Dragon Index was down 1.5%. Tech, you can see already, is sort of bearing the brunt of this. I'm just taking a look at names like Alibaba, for instance, JD, that are really leading the decline so far in the session. Also seeing some of those auto stocks off, like Li Auto, for instance, BYD, again, some of the big drags so far. Actually, Tencent is still holding up. You can see nearly 1% so far. But overall, I mean, the sentiment for the day is is sort of a lack of direction, as Dave was saying. We're sandwiched between holidays here because we've got that public holiday tomorrow. China, of course, still on its Golden Week holiday. We are getting some initial data out, though, and it tells us travel does seem to be very much in vogue, and we're seeing some really good travel numbers so far.
It's AMAP, right?
AMAP is the Alibaba tool, actually, even though the stock's lower today. But they did report their largest number of daily active users on October 1. AMAP is sort of their travel platform that they've really been reworking to integrate more AI features. It's also a big face-off against names like Baidu, for instance. But some of the movers in the session so far, we're tracking really in the battery space, but CATL, Tianqi as well, lithium. This is a story around analyst downgrade. So JP Morgan, for instance, has cut their CATL shares to neutral. Their price target still, though, 600 Hong Kong dollars. So you're sitting around that point right now. Tianqi also cut down to $49, so very much in line. And Zijin Gold is one of the big standouts actually so far in the session, but they've been rated a strong buy at China Merchants, and we're coming off, of course, what was the listing for the company in Hong Kong. Oil stocks as well to note, because we've seen oil actually moving a little bit higher in the session so far, and that's the story around OPEC Plus. So they did agree to a production hike, but importantly, it was a lot more modest than what had been expected by some. It's a huge trade-off. They're sort of trying to balance prices, but they also want to balance output, and they're seeing essentially other drillers outside the alliance that are continuing to increase their output, and they're trying as well to balance off against that. But you are seeing, again, sort of mixed moves so far and fairly flat, but maybe traders are off today, actually, so maybe some thin liquidity.
Yeah, well,
Public holiday tomorrow, you can take it today as well.
Why not, right? And that's a long weekend for you, and you get to escape what had really been a lot of crowds here in Hong Kong. Anyway, I can get to my rant a bit later on. The Brent is trading 1.5 to the upside. I think Bell was just pointing out, of course, when it comes to gold, we're near that 4,000 level as far as that specific play is concerned. Okay, we alluded to this next story that's coming up shortly a few minutes ago, me and Bell. So Beijing is pushing the White House, the Trump White House, to roll back some of these national security restrictions on Chinese deals in the U.S., dangling this prospect of a massive investment package as part of a broader, should we call it a trade or broader deal? Let's bring in Min Lo, our China correspondent, to help us understand here what this, how big this investment package is like, or could be.
Yes, so according to sources, they're saying that China had floated a $1 trillion investment package into the U.S. And this is obviously China trying to seek a similar treatment as countries like South Korea, Japan, the EU. These places have pledged something between $350 to $600 billion in investments in the U.S. But China is looking at something far larger in terms of scale, and also seeking for lower tariffs for imported inputs for Chinese factories in the U.S. And this is obviously something that President Xi and Trump will likely discuss at the sidelines of the APEC summit in South Korea. Yeah, it's a big deal. It signals an important shift in U.S. policy if President Trump approves it, because it was just a few years ago when Congress had set up this congressional committee to screen Chinese investments into the U.S. and there's CFIUS, the interagency committee, that was blocking a number of U.S. deals in the U.S. But obviously, if this comes through, it will be important and beneficial for China as well, given the thin industrial profits in China and the deflationary pressures there. With this, then Chinese companies can go to the U.S. to build and to sell in the U.S.
Yeah, something China obviously wants, but it would be a huge about turn for Trump, who really rewrote the deals for dealing with, or rules rather, for dealing with China in his first term. But another story we were first to report on was on Friday. But Huawei, it seems, I mean, we know it's very reliant, but we're seeing what sorts of parts and which companies as well that it's getting different components from for its chips.
Yeah, and this is interesting because when Huawei had announced the launch of this 910C chips, the third generation of their AI chips that went into mass production earlier this year, that was really touted as a big breakthrough for Chinese chip makers, especially SMIC, which is the manufacturer for Huawei. But now, according to this teardown by Tech Insights, the chips actually contain components, including high bandwidth memory components from SK Hynix and Samsung, as well as dies from TSMC as well. But granted, yes, these are older generation technology. TSMC has put out a statement saying that those dies are no longer in production since late 2024, but still it shows shows you that Huawei has somehow been able to stockpile a huge number of these components, either just ahead of U.S. rules tightening or through third-party intermediaries, because there has been cases of Chinese chip designers, buying from TSMC and reselling to Huawei without disclosing them. Although, of course, when it's discovered, the U.S. government then sanctioned those companies. But still, it shows you that a lot of Huawei's hardware is still dependent on foreign technologies here.
Yeah, huge short gaps, really, when it comes to chip equipment in particular for China. That was our China correspondent there, Min Lo, joining us. And subscribers can read more about the relationship between Washington and Beijing in this piece from our team. That's on China hawks in the U.S. growing uncomfortable over President Trump's push for deals with Xi Jinping. So check it out on the terminal or at Bloomberg.com. And Dave, you're checking tech stocks.
Yeah, so, we talked at length already about Alibaba. I think on Friday, as Belle mentioned, of course, our change in the time zone as we go into the weekend. I think in case we missed it, I did at least, Morgan Stanley upgraded their price target on Baidu ADRs. We're currently doing this as far as markets are concerned. But it's really been a terrific run so far for Chinese tech and these big tech platforms. Let's bring in Nicola Lai, Managing Director at Barings. She also manages, of course, the Hong Kong China Fund. Good morning and nice to see you. Must have been a really good few weeks for you.
Yeah, we are obviously seeing a bit of a divergence, in the strength and in the positive sentiment in the markets. We're not quite seeing it in, the consumption data or the physical economy, sort of the areas there yet. But we're observing very closely. We're just making sure. A lot of times market does lead, and so we've got a lot of people on the ground. We're doing a lot of trips. For example, we actually think industrial activity is actually coming in a little bit better than expected, obviously from a very low base. But we think that China's industrial capex is coming in better than expected. So we're staying sort of very hopeful in expecting some good data coming out of China.
So then if you're seeing that divergence, and we are seeing that divergence between sort of the real economy and then what we see in stocks, how much conviction do you have in the rally and what we've seen so far then?
I think, obviously, we're very focused on the next 3 to 5 years. And so, obviously, I think we've seen a good normalization from very depressed levels, especially in the internet names. Going forward, a lot of our attention and a lot of our work is really on digging deep in what exactly is this return on this AI investment. AI obviously is an important catalyst, and I think a lot of people have underestimated a lot of the Chinese technology platforms' ability to capture and benefit from it on a long-term basis. So from a long-term basis, I think there's a lot of I've done a lot of meetings with companies recently. China really is one of the key manufacturing bases for AI server components, right? Be it for Chinese companies or for global companies. The addressable market is very big. So we're seeing a huge amount of demand coming through, a lot of aggressive capex numbers coming through. Obviously, it all coincides at a time with there's a lot of IPOs and there's a lot of ability to fundraise and fund a lot of this growth. So as long as it translates into earnings growth in the next 3 to 5 years, we're looking for companies that can really capture that and whereby it's still reasonable valuations from a long-term perspective.
As you point out, markets have re-rated, and the old school tech names have re-emerged as recipients of fund flows, recipients of attention. I think you mentioned CapEx. Alibaba came out and upgraded their CapEx alongside that. Markets are trying to now figure out. So I think no question that AI and semiconductors is a real story in China. Markets are now trying to figure out the story within those themes. What criteria do you guys use to sort of handpick who the early winners might look like?
I think we're really looking at companies that have what impresses us a lot, perhaps I should say. I've done factory visits 10 years ago to today, and it's very impressive. These technology companies have leapfrogged, and some of their factories are the best state-of-the-art, highly automated. There's barely any people in them, extremely sophisticated.
Wow.
So I think, as long as they're enabling this tech trend, we look very much for enablers and not the copycat Me Too producers, and people who can really capture the content value, produce, have the capacity at the right place at the right time, and that is underappreciated by the market.
How much do you worry about the risk of tariffs or even sanctions being applied to some of those companies? I mean, you mentioned, for instance, some of the key components of AI servers, and optical transceivers is one area of the market we've been tracking because we've seen such a huge run-up. And these companies supply to China. They also supply to the US. Is there a concern, though, that the US obviously grows wary of the progress they're making in things like factory automation and then tries to shift away their supply chains?
I mean, I think this is not new news. So a lot of the companies have had a good 3 years to really absorb and to plan and to recalibrate. It's a global production base we're talking about. So it's not really, they're not relying on a single manufacturing base. And in terms of we just really find it hard. The ecosystem is such an important element in efficiency and in driving those low cost or sort of reasonable cost components into what is becoming more and more sophisticated and expensive. And so I think a lot of the Asian manufacturing bases have a very, very big role to play in supporting this growth.
Can I ask you about the other part? I mean, you alluded to this at the very start of the interview, that there has been a run-up in markets. The underlying data has so far not changed as quickly as the market would perhaps would merit. There's a part of the equity market that's sort of been left behind. Things like some of the big EV plays, for example, some of the big platform names. And I wonder how you're looking at exposure to those specific parts of the equity market. Now that, it's clear who the winners are, but what do I now look at as far as the value on the table is concerned as far as the others?
I mean, I think it's really combing, some of these big platforms. It's precisely because they're big, so there's a lot of moving parts.
Yeah.
And sometimes it takes time for a lot of these drivers to really show up. And I think that's why you do tend to have what they call laggards as well as first movers. And so it's really about going back to valuations and seeing, has the market really priced in the changes that we're seeing? A lot of these companies, perhaps they've got cash cows that are supporting a rapid change in development. It's just that we're not seeing it on the headline numbers yet.
Right.
But there's a lot of underlying work that's been done to capture a lot of this. And so actually we do see some of these very favorably as well.
Okay, well, let's talk again next time about that.
Thank you very
Nicola, very nice to see you. Nicola Lai there, Hong Kong and China Equities Investment Manager at Barings, on many things. Okay, lots more to talk about, of course, in the next time. Okay, coming up, we'll be turning attention to Southeast Asia, the Philippines specifically, where equity sentiment really remains relatively cautious given what's going on there domestically. We'll be joined by the President and CEO of the Stock Exchange coming through next. This is Bloomberg. Right, about 15 minutes into the cash market session in Manila on my right. We are up a fourth day after 3 days going into the weekend. That's certainly coming off the longest losing streak of the year going into this time last week. Still, the market remains one of the worst performers year to date across the region. To just get a sense of how we decipher noise from signal, let's bring in, out of Manila, Ramon Monzon, President and CEO of the Philippine Stock Exchange. Mr. Monzon, good morning and thank you for joining us on shows. Why don't we let me just put that question directly to you. Who do we blame for this recent underperformance? What do we blame?
Well, I'm not in the blaming game, but I would say what's causing the problem in our equity market, basically it's the political scenarios happening here, the corruption scandal, the investigations. So what's happening to our market basically is really, it's a sentiment issue, a confidence issue, because our fundamentals are still very strong. earnings of our index companies are up, almost 17% for the first half. The CMEPA law, which reduced the stock transaction tax from 60 bips to 10 bips, was passed and was made effective July. And in July, we saw an increase in our volume. I mean, our volume increased 30.4% compared to the average daily volume we had in 2024. We had after a net foreign selling of about 23 0.2 billion in 2024. In July, we had a positive net foreign buying of about 1.6 billion pesos. And of course, after the corruption scandal erupted, this reverted back to net foreign selling for August and September. But again, I mean, that's what's confronting our market now. But I would say that not all is gloom and doom. There's some there's still some bright spots that we look forward to. But the most important thing is we've got to get over this problem on the corruption scandal. I think the formation of an independent commission for infrastructure to investigate all these corruptions was a right step forward. But of course, the investigation results must be swift, must be credible, and must be fair. When I say fair, I mean if it hits the allies or senators and congressmen, so be it. I mean, cases have to be filed against them. So that's one bright spot, the formation of the independent commission to investigate this corruption scandal. Our big IPO for the year, Maynilad, has been garnering a lot of foreign interest. There are two multilateral lenders who will serve as their anchor investors, which is IFC and ADB, who is still getting board approval, but they expect to invest about $245 million in the IPO. And just recently, it was confirmed that there are 6 foreign cornerstone investors. So I hope the results of the ICI investigation and the Maynilad IPO would be the catalyst to turn around what's happening in our market.
But do you see further downside in the short to medium term if the corruption scandal is still ongoing and still continuing to spook foreign investors?
Yes. I think until foreign investors see clarity in the results of the investigation, they will continue to price in risk in our market. But it's October now. The listing for the Maynilad IPO is November 7. We have 1 month. Hopefully, in this 1 month period, something concrete will happen. In the ICI investigation, and hopefully this could be the catalyst to turn around what's happening to our market.
Yeah, Mr. Monzon, and let me ask you directly. In some sense, we've seen many of these investigations in the past. The sense I get from the people I talk to and the news flow coming through out of Manila, and I can't look at it in a vacuum, right? I look at the recent elections and the changes there, and I just got to wonder whether there is some level of change in political accountability that's taking place there. And do you see perhaps... Well, okay, let me put it this way. Foreign investors seem to be worried that this might have a, pardon the pun, a spillover effect into more of consequence issues, a re-rating of the ability for the country to raise money, the GDP spending, the credit ratings, for example. Are foreign investors being too pessimistic over what's going on there, or is there really something taking place?
Well, there's probably... I might call skepticism, not cynicism, on what could this independent commission really achieve. But I think our president, I think, knows the real score. This is something that can't be a cosmetic, approach to the problem.
Right.
I think, as you can see in the September 21 rally, I think a lot of people are angry. I mean, they're really angry, I think They have to, and I think they recognize this. So I don't think this is going to be one of those cosmetic investigations that, will be short term. I think this will have some really, significant results that will hopefully change the governance of, our political leaders.
The recent low of 5,900 points then, do you see the market going below that again? What's sort of your expectations around the levels to the downside and the upside in the short term?
I think in the short term, everything will depend on what's happening politically. Because like I said, fundamentally, our inflation rate is within targets, our GDP growth rate is within targets, the corporate earnings are, up. So it's really the political events. And, like I said, if the coming, in the coming weeks, if the results of the investigation show that it's going over, I can see the market going down some more. So, I think it's very important that something swift, credible, and, all-encompassing investigation should be, and prosecution should be done.
Mr. Monzon, final question for you. To your point, the fundamentals seem unchanged, right? And the only difference is it's just a much cheaper market now. We're trading in single-digit multiples there. As they say, do what locals do. What is the sense among the local institutional investor community there over market sentiment?
Well, I think the local institutions are, following the lead of the foreign investors. We see net foreign selling, the market, big net foreign selling in August when the corruption scandal erupted. Another, big net foreign selling in September. So I think our local institutions are just going to be following the lead of the foreign investors. They're going to await, something significant or meaningful that, that can come out of these investigations.
Ramon, thanks very much for joining us. That was Ramon Monzon there, President and CEO of the Philippine Stock Exchange, joining us from Manila. Thanks very much for your time. Now for a quick check of markets as well as we head into the ad break here. But checking Baidu, it's actually fairly flat so far. We did see a slight gain on the Friday session on Wall Street. That's after Morgan Stanley hiked their ADR price target for the company. Baidu really has been one of the standout performers over the last few weeks. It's really around rethinking around their AI strategy. Also, more updates that we're getting on their in-house chip efforts. Goldman Sachs as well, they've hiked their price targets rather for SMIC. Huawei, they're getting a boost, of course, that AI ecosystem boost that you see in China. These are the two major foundries. And also, Dave, checking casino stocks.
Yeah, which perhaps did quite well going into this sort of window of holidays right now, and we are getting more data. Not that the data's bad. Nothing has been blockbuster so far. And we are seeing some money gain and taken off the table to the point you were making, Bell, earlier on. We're also seeing similar dynamics across some of the big winners of late, like tech. There's plenty more ahead here on The China Show. This is Bloomberg.
Welcome back to The China Show this morning. Taking a look at the Hang Seng half an hour into the session. We are a little bit under pressure today. It is a sort of a story around some of the biggest beneficiaries we've seen of late, the likes of Alibaba, the likes of Baidu, that have been rallying but seem to be taking a little bit of a breather this morning. And you were making that point earlier, Dave. Trading volumes are 40% lower than where they'd typically be on a 20-day moving average basis. But it also just tells you the importance of southbound flows to this market.
Yeah, it's really picked up in terms of obviously the overall turnover that's picked up over the years. It's really been a big source of flows, and recently, if you look at on a daily basis, you can check this out on the stock exchange. Some of the big recipients of all that money have really been these big tech plays, right? So on a day when, for the lack of catalyst and you have a mainland market that's closed, there will be some temptation to take money off the table. And of course, there is also a holiday as well tomorrow. So we're sandwiched between.
I feel like some people might be taking Monday off.
Oh, no, they are. Yes.
just my hunch.
That's just you. So, okay, anecdote here as we look at the Japanese markets, right? So I went down to get some breakfast here and there was pretty much nobody that I had to contend with.
That's always a good indication.
Yeah, stack of bananas was untouched and fresh, plentiful. So there's no competition for that. The coffee line was quite short. The big story, though, has really been in Japan, right? We're up 4%. This repricing is the way maybe to put it around the results from the weekend. We'll unpack that further. I would imagine volumes there, which I haven't checked. I'll correct myself if I'm wrong on this. It's probably picking up substantially. Some of the big gainers coming up on your screens very shortly, apart from the banks, which are trading lower on a question mark here on expectations. The BOJ might not be able to move because of the change in the political scene there. That's still an open question, of course, but certainly markets are moving along those lines as well. Very quickly, you have defense, you have tech stocks, and of course we talked about the banks. We're coming up on your screens very shortly too. And the reaction piece from our folks at Bloomberg Economics talks about maybe what the implications are as far as the monetary policy implications are concerned. Let me just go through this verbatim. Not verbatim, I'm going to paraphrase now, that the victory will tilt Japan's fiscal policy more expansionary. To borrow one of the phrases that Taro Kimura used, she would be in favor of more juice for this economy. For the Bank of Japan, it could also mean slightly slower pace of interest rate hikes.
Yeah, so sort of difficult to understand. Is this sort of markets that are reacting because Takaichi was a surprise result, or are they also reacting to what could be a shift back more in the direction of Abenomics? And so how sustained is this going to be well? But let's bring in Nicholas Smith, Japan strategist at CLSA. And Nicholas, what's your view on this? Is this more a knee-jerk reaction, or is this investors that really like the signs around easy policy settings, for instance?
Trying to speak. I think the result was a surprise. All the votes were suggesting lawmakers were supporting Koizumi. And in the first round, that's what happened. In the second round, 85 lawmakers switched their allegiance to Takaichi, which was very clearly the voice of the people. So if you look at any polls, they were strongly in favor of Takaichi. Now, she has a reputation of, she said last year it would be stupid of the BOJ to hike rates. And then we had a problem with the cost of living crisis. And some of them were saying we'll cut consumption tax. And some of them were saying, well, we'll just hand out 20,000 yen to everybody since we don't know, we don't have the computer systems to just send it to the people who need it. And amazingly, what no one mentioned was 75% of inflation is food, and the food prices are going up because of imported food prices, because of the weaker yen. And so it seems very clear that if you wanted to deal with this problem, and remember, inflation is above the rate of wage growth, and wage growth is the best that Japan's had since 1991. If you want to deal with this, you allow the rates to go up. Now, it's still a pretty dovish situation with deeply negative real rates. And so, there are people out there who say, Japan can't handle the rise in rates. It's got a lot of debt. And yet we look at the numbers last year, and interest payments were 1.3% of GDP, whereas they were 3.1% of GDP in the US. I think that people have got their shoes on the wrong feet.
So, David here, is that your way of saying we are underestimating the likelihood that the BOJ can in fact proceed with that rate hike this month?
I think that the rate hike will probably go ahead. In fact, people have this awful habit of taking what goes on in the US and copying and pasting it into Japan. But look at what just happened in the Fed in the most recent meeting. The pressure was from Trump on Jerome Powell to cut a lot, and he asserted his independence by cutting less than was expected. I think that in the very same way, Ueda will hike as needed by say 25 basis points. I think that the difference between Japan and the US is you only get to influence a central bank when you're changing the chair or the governor. Powell steps down in May, but Ueda has smack on 2.5 years still to run. You can't influence him, and he may well want to assert his independence, which he has under the Bank of Japan law of 1997.
Yeah, it's interesting you say about the BOJ and you're still expecting that hike at the upcoming meeting because swaps, of course, are indicating that we won't see that happening at all. But we're seeing bank stocks certainly reacting to that this morning. They're under pressure, as you would expect, given what we're seeing in swaps pricing. Where do you see the opportunities in the short to medium term then?
Well, Japan is going to have to normalise its rates. It's very dangerous that it's got real rates this far negative. So I would look at the bank stocks and say, well, great, we've got a discount sale at the local supermarket. Now's the chance to pick up the things that we want to own at a knockdown price. I don't think you need to run for cover at the first crack of a twig. I think that this is an opportunity.
Nick, final thoughts from you. What else are we missing here?
Well, I think that she is talking in terms of fiscal spending. Typically, that tends to benefit construction stocks in Japan. There's a lot of talk of defence, and of course, the defence-related stocks have done extremely well recently. She wants to talk about technology, and she needs to. So semiconductors, AI, they've been benefiting considerably. So you've seen Tokyo Electron and Advantest and so on. And then she's been talking about cybercrime, which Japan really needs to do something about with the Asahi story of last week. And perhaps I shouldn't be mentioning individual stocks there, but that's another area of real importance to the market.
Nicholas Smith, thank you so much, sir. I know we made this request very last minute for very obvious reasons, given the market reaction there. Thank you so much for taking the time, sir, this Monday morning. Nicholas Smith, a Japan strategist at CLSA. Still to come here on shows, we'll take a closer look at China's challenges in creating a self-sufficient chip ecosystem amidst U.S. restrictions. That's now a question mark, of course, because some things may be on the table right now that perhaps weren't as recently as a few months back. We're joined by the IDC coming through next. This is Bloomberg.
You're watching the China Show, and if there's a sector that's really stood out in China over the past few weeks, it's very much what we're seeing in the semiconductor space. I mean, it's really been a theme we've tracked over this year, and it's that big story. How is China going about catching up to the US? And what does that gap look like between the industry juggernauts like NVIDIA, for instance, and what we see in China? Some of the names that have been capturing our attention this year. So Cambricon, for instance, has been one of the standouts, at least from a stock perspective. It's been on an absolute tear. It is an AI chip designer, of course, much smaller than what we see with NVIDIA, but certainly it is one of the more promising ones in the local space. Manufacturers as well. I mean, we talk a lot about SMIC. We talk a lot about Huawei. These are the major foundries as well. Chip equipment, this is an area where China has very much been seen as a laggard. It doesn't have access to the extreme ultraviolet lithography equipment that we see from ASML, but we do see some advancements coming across for names like SMEE, for instance, Shanghai Microelectronics Equipment. OSAT, JSAT was one of the biggest that we see in the world, and then also what we're seeing in terms of in-house AI chip efforts, and that's been one of the reasons we've seen Baidu on such a tear over the past few weeks as well. It comes down to their Kunlun efforts, their in-house chip efforts, and we see the same from Alibaba, what exactly they're doing in this space, David.
Yeah, you know, I'm glad you ended it on those sort of household tech names in China, because I think, for one, we do have enough information, at least up until a few weeks ago, then we started to rethink what kind of stocks Baidu and Alibaba are now. But the market has also scrambled effectively for information around the rest of the tech space, right? And I think a very good, and I've taken some of those names that Bill just pointed out, right? And just showed you how analyst coverage has increased really for many of these names, and how likely this will continue to increase as we try, again, figure out and have more information around these companies, right? So compared to 5 years ago, I'm not going to go through each and every one, but SMIC had 6 analysts covering the stock as recently as 5 years ago. And as you can see, that's jumped to 22. And similar changes that we've seen for some of the other names across that ecosystem. So as investors try and figure out what the thesis is, we'll certainly need more quality information around what these companies actually do and sort of where the bottlenecks are and where the opportunities lie as well, Bill.
Yeah, it's a really interesting sort of signal of how that ecosystem is developing. But at the same time, you continue to see, of course, very established dependencies. And Huawei, for instance, this is a teardown that we've seen, but has used advanced components from Asia's largest tech firms and at least some of its leading Ascend AI processors. That's its AI chip. But as I said, a research firm discovered those during a teardown, highlighting its continued reliance that we see on foreign hardware. So let's get more on this now with our Bloomberg tech reporter, Gao Yuan. And Gao, great insights, of course, into the dependencies that Huawei have, especially when you do have those restrictions in place. But just talk us through what was found out of that Tech Insights report.
Yeah, good morning, Annabelle. That's a very interesting found, actually. In the teardown of several Huawei's Accent 9C, which is the most advanced AI chip Huawei can make right now, they found dies from TSMC, which is a Taiwanese chip maker, and also HBM, which is high bandwidth memory chips made by South Korean companies like Samsung and SK Hynix. So that means Huawei's most advanced AI chips are actually equipped with the foreign-made components that is actually very, very interesting developments that we we didn't hear it before. But for Huawei, I think I don't think it's a good thing for Huawei to use those kind of components. But at the time being, with all this, you talk about the tech restrictions. They don't see this, all homemade components feasible. So that's the only reason that they have to use those foreign-made components.
Where are the biggest bottlenecks right now, do you think, for China and for Huawei in particular? Is it on the HBM side? Is it on the equipment side? How's it most affecting the business?
There are many, actually, in terms of chip making. First of all, HBM is one of the bottlenecks. Especially when you're talking about AI and data centers, you need those chips to talk internally very efficiently and also communicate outside with other chips. So the interconnection is very important. So that's why the memory chip is important. And also from chip manufacturing side, there are a bunch of bottlenecks in chip making machines, materials, and also chip design software. So the bottlenecks are basically everywhere. But don't make a mistake. China is making progress. Huawei and SMIC, they're all making progress. But the progress is not earth-shaking for now, as we see. So basically, they are making progressive progress to make a homemade component more in those supply chains. But overall, it's basically still stuck in 7-nanometer DUV technology, which is generations behind what TSMC is using and what TSMC is supplying to their clients such as Apple and NVIDIA. So the gap is still pretty big.
Gao-Yan, thank you so much, our tech reporter in Singapore for us. Let's bring in Mario Morales, Group VP of Enabling Tech and Semiconductors at IDC, joining us right now. Mario, good morning from the Asia Pacific. Thank you for joining us. You might have heard some of the conversations we just had just now on that. I'm wondering if we could start there. As one area closest the gap with another, you are bound to get gaps anyway. Markets are trying to figure out where the gaps are closing quicker than other places. What's your take of, just compare and contrast the ecosystems for us, U.S. and China?
Sure. I think when you look at both industries and both countries, I think you're going to find some strengths in each one. I would say that the U.S. continues to lead in AI, in compute, and even its ability to put some of these things together because of the large fabless domains that we find in the U.S. When you think about China, China is the largest semiconductor industry as a whole. And today, about 25 to 30% of all of the demand in China is being served by the local design houses and suppliers within the supply chain. So the strengths that we see moving forward is that China, over the past 5 to 7 years, has continued to build a tremendous amount of capacity, specifically in the mainstream and mature nodes. And we think that as we look at the end of this decade, they're going to control about 30% of the total capacity around the world. So any type of design, whether it's a smartphone or a 5G infrastructure piece of equipment or a PC, about 70% of all the components that go into these systems is primarily using mature and mainstream technology. So even though we tend to kind of gravitate very quickly to AI and CPUs and high bandwidth memory, the reality still is that a large amount of the different market segments that consume silicon continue to use some of these older technologies that now China is becoming a very strong player in.
Yeah, so as China increases its capabilities and market share as well of mature nodes, how does that then also erode the power of names like SK Hynix or Samsung, and then their ability to reinvest in R&D in return?
Well, I think when you look at the memory space specifically, you do have two big players coming out of China. Each of these companies control about 3 to 4% of the market overall. So there's still quite a bit of time before they can get to a position where they're as competitive as SK Hynix or Micron or even Samsung. But they are growing. And the more the OEMs in China continue to switch suppliers, going from a Samsung to one of these local suppliers like CXMT or YMTC, then you're going to see some of their market position to continue to grow. These companies are growing bits a lot faster. They're investing very aggressively, but they're going to need more time to catch up from a process and technology standpoint. But they are making gains. And I think the more they're able to scale with some of the Chinese OEMs, the bigger they have a potential to grow.
Chinese chip makers are really limited at 7-nanometer capacity. But we are seeing names like Huawei, for instance, building clusters of AI chips instead. And they're saying that as a result, you are able to get a lot of power and a lot of technology out of those clusters together. Pursuing that type of architecture, how much does it then overcome the hurdles from lack of access to chips from names like NVIDIA?
I think when you look at the play here, I think that necessity always drives innovation. And even though Huawei still doesn't have the same access that NVIDIA or AMD has in terms of process technology, they are trying to find unique ways of designing and building systems. And I think we cannot underestimate the fact that Huawei has been building systems for decades in 5G infrastructure or 4G infrastructure. And that know-how has continued to be something that they can leverage. Some of the Chinese companies, whether it's Huawei or Capricorn or Bitmain or Canaan Creative, these are all companies that are very good at designing ASICs and very good at designing SoCs. And now they're putting their assets to develop these AI chips. And you're seeing some unique partnerships between some of these companies and some of the cloud service providers within China. And so I think that what we cannot underestimate is their ability to design. Now, some of these smaller companies like Capricorn and Canaan Creative, they still have access to other foundries beyond the Chinese foundries. The only one that's limited has been Huawei, but you can see a resurgence already in Huawei just based on the fact that they're beginning to grow market share again, both in the equipment side of things, but also even in smartphones. And that always bodes well for the ability for them to continue to grow. And I think the most important thing too is when you think about AI, you're going to need a tremendous amount of data to feed these large language models. And a lot of the data that they're leveraging is the data that's being created within smartphones. And so the smartphone, the smart home, and you think about the automotive areas, these are all markets that China is leading in. And they're able to use these as hubs to continue to grow the data foundation that you need to feed and train these AI models. And so I think every single day you'll see a Huawei or anybody else that's in this space continuing to develop their silicon based on all this data that they're able to get access to.
Yeah, and we certainly are seeing the result of that, which is Huawei, as you said, managing to increase its market share domestically. I think one of the trade-offs, though, with that architecture they're following is that it's very energy intensive, maybe not such a big burden in China when you've got more access to cheaper electricity, essentially. But how does it impact their ability to take this sort of technology abroad when you've got the US and China that are competing for the full stack they want in other markets around the globe?
It does continue to increase the cost burden, right? So when you think about someone like Huawei, they're already using technology that's likely 4 generations, if not more, behind the leaders in the space. And so not only is there a cost adder to the chip design itself, but now you have to add the cost of power. But like you said, having access to power in China is not probably the concern for someone like Huawei, but I think the cost structure is something that they're going to have to continue to address. Now, I do believe at some point in time, SMIC will be able to gain and develop their technology to be able to go down below 7 nanometer, but still that cost burden will remain, and also the yield concerns too, because these products do not yield as good as what you would do if you were to build them with TSMC directly.
Yeah, that's right. Yeah, really great point on the yield there to finish off. That was Mario Morales there, Group VP of Enabling Technologies and Semiconductors at IDC. Thanks very much for your time. And if you're a subscriber and you want to re-watch that interview, you can do it via our interactive TV function, TV Go. You can also become part of the conversation by sending us instant messages. So do check it out at TV Go. We'll have plenty more ahead. This is Bloomberg. Taking a look at how Vietnamese markets are coming online this morning. A bit of strength. We just had the GDP figures as well at the top of the hour, but essentially third quarter GDP rose more than estimated. So you can see there 8.23%. Bit of strength as well, particularly what we saw in the services sector of the economy. But that is it there for the GDP. CPI as well, rising 3.27%, again ahead of what estimates were.
Yeah, I'm surprised with the 2 decimals of precision there. When you look at the economic numbers, 8.23%, not a tick lower or higher. Very quickly, let's have a look at the, in fact, you know what, just a second. So we're looking at the September consumer prices coming in at 3.38%. I think there was a correction that came through here just in the last few minutes or so. Out of our colleagues there. Okay, gold's doing well, and before you know it, we're, in fact, you know, at this point, we're a good 1 or 2 sessions away from taking out 4,000. Gold stocks trading to the upside on the back of that.
If we face something against national interest, I believe it's important to clearly express our position within the framework of the Japan and US agreement. At this point, I have no intention of overturning any agreement made so far.
That was Japan's new Liberal Democratic Party leader, Sanae Takaichi, on the US trade deal. And it's 11:29 a.m. in Tokyo. Japanese markets just about to go on their lunch break, but it has been a very strong start to the session, Dave.
Yeah, I mean, 60% heavier volumes than usual there as we go into the lunch break, given, of course, everything else that's been taking place there over the weekend. It's coming up very shortly as we just wrap up. 15 seconds to the break. There we go. There we go. So we're looking at quite a substantial amount of interest coming in, a substantial amount of repricing that's taking place. Now, how long the sort of dynamic lasts is obviously yet to be seen, stating the obvious, but I mean, there are conversations around, are we still underestimating the fact that the BOJ will probably go ahead and hike interest rates? But again, on that very note, have a look at some of the big sectors that have traded and sort of your top 3 winners so far. And the biggest loser, unexpectedly, has been the banks on the back of the repricing, which I'll get to in a moment. But of course, if it is a story of lower rates for slightly longer, let's put it that way, then you get, of course, a bump up in real estate. If it's fiscal stimulus, then of course you get a lot of the big heavyweights there trading on your screens to the upside. But make no doubt, it's really been a good day to be long these markets, right? Just on that very note, on will the BOJ managed to hike interest rates this month. And I think when you look at the pricing around the BOJ's October 30th meeting, so we were trading at about, let's call it a 70% probability of a interest rate hike at the end of the month, and that's been pulled down to about 20% as I speak, 23% to be more specific. So it's about 1 in 4, which I think are still good odds. But in any case, yeah, lots to talk about given the change there that we've seen over the weekend, Bill.
Yeah, that's right. Let's bring in Margarita Estévez-Abe, Associate Professor of Political Science at Syracuse University. Margarita, thanks so much for joining us and staying up late. But I do want to start with really it was a surprise. Takaichi was not seen as necessarily the front runner in this, but what do you think tipped the balance in her favor eventually?
So I think just many of the forecasters were wrong. I think what motivated the LDP to go for Takaichi, because many of the LDP members, the politicians, actually think that she's too far right. However, in July, in the lower house elections, the LDP has lost sort of votes to a couple of conservative parties, especially to the far right sort of populist party, Sansei-to. So I think there was a hope that Takaichi, the most far right candidate in the leadership race, might be able to contain the further rise of Sansei-to.
Margarita, David here. So what does that then mean in terms of the likely coalitions we will see?
So this is difficult because so Sansei-to doesn't have a big presence in the lower house because they won big in the upper house. So now so Takaichi probably has some options, maybe some Ishin, but Kokumin. So now the electoral sort of space is just very crowded with sort of multiple conservative parties. So Takaichi will just look towards sort of Kokumin or Ishin to negotiate. Now, we wouldn't know whether one of them would agree to join the coalition government or whether they would just agree to cooperate on, just sign some sort of policy agreements. So we are yet to see. But one problem here is that the long-time coalition partner of the LDP, Komeito, they don't really like someone like Takaichi, but they have put up with Abe, so they may not leave the coalition. But it will be just interesting to see what happens, what kind of arrangement Takaichi will form with either Ishin or Kokumin.
And how does that also constrain her ability on the policy front? And what are you expecting in particular, given she was someone who promised to unleash a lot of spending?
Yes. So this, so Ishin is not into. So I guess so. This is so some spending. I think everyone would agree to it because one of the reasons why the LDP lost is the Japanese ordinary working families are really hurting. Partly because of Abenomics that has just lowered the Japanese yen's value. So people are suffering from the rising sort of prices. So they will, I think, just most of the conservative parties might just agree on just going for some targeted tax cuts and some sort of investments to help small businesses. So I think tax cuts are just more likely, just tax cuts that are targeted at the middle, sort of low and middle income groups. Komeito can live with that, and so can Ishin and Kokumin on that.
Margarita, what about gender-related issues, gender equality, for example, or are we overthinking that?
Yes, so this is really interesting that this is a historic moment, right? So Takaichi is the first. She's going to be the first female sort of prime minister of Japan. But she's just full of contradictions because she is, again, like Abe. She is a nationalist, arch-conservative, and she's just someone who believes that the family is more important than the individual for the nation. And so although she promises policies that would just help women balance work and family, she nonetheless is not a feminist. And so, for instance, in Japan, sort of women who get married, they cannot maintain their maiden names because the current law is that everyone in the same family have to just have the same family name. So Takaichi just stands very firmly on things like this. And another very interesting sort of symbolic thing about the Japanese gender equality is whether the current emperor's daughter, Princess Aiko, will be able to succeed her father or not. And here too, Takaichi has been just quite vocal, and this is interesting. So she says that, yes, she supports changing the law so that Princess Aiko can be an empress, but she nonetheless says that the Japanese patriarchal family is very important, hence that even though she supports Princess Aiko to be an empress, that her children should not be allowed to future sort of succession. So she is the first sort of female leader of Japan, but nonetheless, she just seems to be into this maintaining highly patriarchal Japanese family system, both at the imperial household level and at the level of just ordinary Japanese citizens.
Yeah, certainly not a likely leader to move forward that gender equality conversation in Japan. What about the conversation around anti-foreigner sentiment and immigration as well?
Yeah, so this is another interesting issue that so Takaichi is just very much in the same mold as Shinzo Abe. And so Shinzo Abe just used to use China and Korea as his punch bags. So in her ideal world, Takaichi might just want to do that. But the whole political situation is now different. So sort of facing sort of Trump's tariffs, Takaichi won't be able to alienate Korea nor China. And the last thing she wants is economic tensions with its Asian neighbors. So then the new scapegoat has been the foreigners who are in Japan. And again, this has been kind of started by the Sanseido, the far-right sort of populist party, and LDP has fully embraced this. So we should expect to see some kind of legal changes to, well, they have to do something against foreigners, like restricting, making it more difficult for foreigners to invest in properties in Japan. So we can just expect something like that to happen. But it's just going to be extremely negative for Japan if they did that.
And, well, can I just follow up on that then? What it means for foreign policy directly with China, with Beijing, and also with Washington? And do you think this puts Japan more likely closer to the orbit of Beijing, or is it status quo and the U.S. remains that ally?
I think it will be just status quo. I think here Japan doesn't have much card to play. So Japan is just on a kind of a tight place where the U.S. is demanding that Japan just increase its defense budget. They're expecting President Trump to ask for a further increase in defense budget. So this is not going to just look good in the eyes of Beijing, but the Japanese government really just cannot afford to have any economic tensions with China. That would be disastrous for the Japanese economy.
We're just getting some commentary as well, Margarita. This is from local media in Japan saying that Takaichi is eyeing a record number of women in cabinet and also to LDP postings as well. But we also had other local media talking about how Shinichi Suzuki could be tapped for the #2 post. Taro Aso is someone, the former prime minister, who also could be given the post of party vice president. Are there any specific appointments that you're watching out for?
No, I would just look at sort of women, which kind of women she's appointing. But the most important thing is which parties are going to be the coalition partners. And as far as her new administration goes, it's really the Abe version too. We can just see this in the fact that she's just really relying on Taro Aso and Suzuki, who is a brother-in-law of Aso. So we can kind of see that she's really just relying on the same kind of people that Abe relied on.
Margarita, thank you so much for taking the time. Margarita Estévez-Abe, they're Associate Professor of Political Science at Syracuse University. Right, just ahead, how a wall of Western sanctions is helping revive this age-old system of barter. It's bouncing back, including the trading of Chinese cars for Iranian metals. The details in that story is just ahead. Welcome back. You're watching The China Show. This unprecedented wave of Western sanctions has really fragmented the global trading system and has helped revive this age-old system of barter or bartering. Now, in one case, you have Chinese cars now being traded maybe directly for Iranian metals. Let's bring in our Asia Transport reporter, Linda Liu, who has more details on this. Last time I think I heard about this concept was way back in school, and the depiction on textbooks was really closer to cavemen more than modern industry. Linda, how does this current system work involving Chinese cars for metals from Iran?
Yeah, this is a really fascinating from our colleagues here. What's happened is essentially around 6 or 7 years ago, the US really stepped up sanctions against Iran. And that's actually caused quite a big headache for Chery because Iran was one of its major international markets. And the restrictions meant that Chery was having big difficulties receiving payments for its car exports. So they've set up this, our reporting showed that a deal was set up essentially to get Chery to sell its parts and technology to a third-party company, which then would export these car parts and technology and semi-knockdown kits to Iran. And in Iran, they would be assembled locally and sold under a different brand. Now, another cog in the system is Tongling Non-Ferrous Metals Group. This is one of China's largest metals companies. And what happens is then Iran would send an equivalent value of metals such as copper and zinc to Tongling in China, where it would then broker distribution among other companies in China.
What we report in the story as well is that barter trade with Iran began about 6 or 7 years ago, according to sources, and that is a period, of course, when US sanctions against Iran really ramped up. So how does that complicate the story overall, and for Chery in particular?
Yeah, so I think we have to make it clear that although currently neither Chery or Tongling are in breach of US sanctions, there's always going to be the risks that Washington could target these companies and investigate them for potential breaches in sanctions, just like it did against Huawei. And before, Western banks actually had concerns over Chery's disclosures during the IPO process. Chery just went public in Hong Kong last month, and our reporting showed that JP Morgan actually withdrew from this listing due to concerns over these kinds of disclosures with its trade in sanctioned countries. So in the end, we only saw Chinese banks working on this deal.
Okay, Linda, just to abruptly change the page here, another story that, you co-wrote, and I want to get more details on this. So if you wanted a custom, your vehicle customized, for example, that you would typically be turning to, premium brands, Porsche, Rolls-Royce, but Xiaomi is now launching this service that enables their car buyers to be able to do so. What do we know about this?
Yeah, Xiaomi's founder Lei Jun launched a service at an event last month. He was really proud and said that, a lot of these services, they're offering customization such as 24-karat gold and ceramic hood badges, as well as paint jobs that take 50 hours to apply and polish by hand. Leijin boasted, that these kinds of customization could rival that of Porsche and Rolls-Royce, and that just underlines an ambition for Xiaomi to come after these ultra-premium luxury customers that these brands are known to have really strong market share in. So Xiaomi is probably more known as a mass market brand, but with the launch of this service, it really shows they're trying to go premium and charge a lot more for its services and hopefully its cars in the future.
Yeah, it's interesting, that sort of premiumization play, because it's the exact same playbook that Xiaomi's used with its smartphones to go up the ladder as well. So now they're applying it to EVs. And smartphones has been successful. How successful do you see it being for the luxury car space?
So that's going to be some metrics we're going to watch over very carefully. Leijin has set out an initial goal to, I think, sell about 40 cars each month for this customization program. And for customers, to be able to sign on, they have to commit to 10,000, I think 10 to 100,000 yuan worth of products. So it's going to be interesting to see how much the take-up is going to be, and see if this service is going to pay off for Xiaomi in the future.
That was our Bloomberg Asia transport reporter Linda Liu joining us this morning in Hong Kong. And some of the other big corporate stories that we're tracking: Hon Hai has reported an 11% growth in quarterly sales, signalling healthy demand for AI infrastructure. Revenue met analyst expectations, totaling around $68 billion in the third quarter. Hon Hai, also known as Foxconn, says it expects server revenue to more than double in the September quarter, while its consumer electronics business remains stagnant. Bloomberg has learned that Stellantis is planning to invest about $10 billion in the US as part of a bid to refocus on this pivotal market. Sources say the car maker may announce around $5 billion in fresh investment in the coming weeks, on top of a similar amount announced early this year. The funding could be redirected toward plants in the states, including Illinois and Michigan. Tata Capital's $1.7 billion IPO has attracted anchor investors, including funds managed by Morgan Stanley, Goldman Sachs and Nomura, along with domestic mutual funds and insurers. The company allocated $523 million worth of shares to these investors ahead of a public subscription beginning on Monday. The listing is set to be India's largest so far this year. We'll have plenty more ahead. This is Bloomberg. Now to some of the top political stories we're tracking today. And President Trump is urging Israel and Hamas to reach a settlement to end the 2-year war in Gaza. Mediated talks begin Monday in Egypt, with US envoys Steve Witkoff and Jared Kushner attending. The first test of progress will be whether Hamas releases its remaining hostages in exchange for Israel freeing Palestinian prisoners. US officials say a potential deal is the closest it's been in a very long time.
The first piece of it, which was very clear from the letter and Hamas's response, is they have agreed to the president's hostage release framework. And what needs to happen now, and they acknowledge in the letter and their response, is there now needs to be meetings, which are occurring even as I speak to you now, and hopefully will be finalized very quickly, on the logistics of that. What that means is, who goes in to get them? Is the Red Cross? When do they show up, et cetera? What place are they going to be? And the conditions have to be created for that to happen. You can't have bombs going off and fighting going on in the middle of this exchange.
Federal worker unions are asking a US judge to block the Trump administration from carrying out mass firings during the government shutdown. They're seeking a temporary order to stop agencies from using the funding lapse as grounds for layoffs, known as reductions in force. The lawsuit says the Office of Management and Budget is illegally pushing agencies to use the shutdown as a springboard for job cuts.
This is a Schumer shutdown. Chuck Schumer instigated this at the behest of a bunch of far-left liberal interest groups. But there are Democrats who are reaching out to Republicans, having conversations about how we might be able to get the government opened up again. So hopefully the reasonable Democrats will prevail.
All right, before we wrap up the show, just a look at two sectors within the Hong Kong markets. One is we're looking at semis, Goldman hiking their price targets for companies on your screens. Again, this AI ecosystem boost. It's not really playing out consistently across both. It's perhaps down to the fact that we are also looking at markets are shut on the mainland today. We're looking at casinos as well. So we were looking at the possibility that this might have to be purely, or at least mostly, a profit-taking exercise, but Citi is being pointed to Citi and this response rate that dropped on the survey among premium mass market customers was down, and markets are perhaps taking that as perhaps that also meaning there's less premium mass market customers. We're looking at Japan very quickly. We are on the lunch break. We are looking at futures right now and certainly trading at one point above 48,000 and certainly much closer to the sun than we were on Friday. And yen is, of course, on the weaker side of things, down against just about everything today. But yeah, okay, that's a very strange pair at the bottom of the screens. But anyway, yes, it is weaker against all of its peers this Monday.